Jim Nolan, and Jim is a distinguished senior lecturer in the Department of Finance here at the McCombs School. He came here in 1980, teaches graduate classes in corporate finance and entrepreneurship, research interests in business valuation, mergers and acquisitions, private equity, and venture capital. He's the faculty advisor for our Venture Fellows program and the Entrepreneurship Society, and he is also president of CFO Services, which is a middle market firm specializing in business valuations and M&A advisory services.
But if I was sitting with a big company, a strategic investor right now, sitting on a ton of cash, I'm earning what, 1%, okay, maybe if I'm lucky on my cash, then one growth option would be, so obviously I could invest and get a bigger global footprint, or I could invest in R&D and new product. But another one would be to go out and buy market share, go out and buy companies. And here's the reason why I think it's a good opportunity right now. The competition is very low. Private equity's out of the market right now. There are no, the credit freeze pretty much got rid of all the leverage buyout opportunities, so the private equity firms are on the sidelines. Venture firms basically are at the end of their runway. They now have firms that started and invested in 01, 02, 03 are coming up. Most venture capital firms are 10-year limited partnership. There's no exits. There were 8 venture-backed IPOs last year. There have been a couple this SolarWinds here in Austin, a few that went public, but they've got constipation. I mean, they've made all these investments and there's no exits on the other side. And so at some point, their limited partners are going to say, I want my money back. So that right now you're seeing secondary markets developed, and a lot of times it is other private equity firms that are raising funds to participate, and they're buying these opportunities at deep discounts because private equity and venture capital are not liquid investments. They have all kinds of restrictions. They're long-term plays. And so I think it's an opportunity for a lot of strategic investors that have cash. Now, financing's difficult right now. Getting debt, okay, trying to leverage the deal is hard, but if you've got cash, if you can go in, make strategic acquisitions at low valuations right now, I think it's a way to get market share